All right, good evening, everyone. Welcome to today's webinar on learning how to use pullback strategy to identify really good and solid trading ideas. My name is Philip, and I'm going to be the presenter today to share with you what this whole pullback trading strategy is about. And so right now, what I'm going to do is I'm going to go into the PowerPoint slides mode so that I can start to show you some of the very important information that you need to learn about a pullback trading strategy. So let me just head out to screen share. Okay, so I hope you are you're able to see my PowerPoint slides right now. So right, today's topic is going to be how you can confidently identify top trading ideas using pullback strategy. And so today's webinar agenda is going to be the three main following items. Firstly, I will I will share with you what actually pullback strategy is about and some of the characteristics of a pullback strategy first. Following that, I will actually share with you what are some of the pros and cons of a pullback strategy. And I think it's very important for me not to just share with you the good things about it, but also to share with you the downside of it. Because ultimately, as what I always like to share in my seminars and webinars, when I educate retail traders and investors, is that any kind of strategy has got its pros and cons. So ultimately, in order to help you understand better which is the best strategy for you, it is really about weighing the pros and cons of the different strategy so that you can make a decision on which is the most ideal one, depending on the kind of personality that you have or the kind of belief that you have about a certain specific strategy. So later on, I will cover the pros and cons of it, and you can see for yourself and decide for yourself whether a pullback trading strategy is something that might work for you or that is something that you might want to try. And following that, I will share with you my 10-step process to implementing a pullback trading strategy. So previously, I started to say that it's only 9 steps, but I realized that there was one key critical step that I actually missed out in the description earlier on. So right now, it becomes a 10-step process from the previous 9 steps, and I'll be sharing with you what this 10-step in sequence is the way when I apply a pullback trading strategy. And then finally, after sharing with you that 10-step process that I have, then I will actually do a live demonstration for you on a swing trade using a pullback strategy. And so just now, about 1 hour ago, I actually take a look at the Singapore market to look across quite a number of stocks to see which are some of the stocks that could potentially be in time or is ripe for a swing trade that is coming up. And the reason why I'm looking at Singapore market is, of course, obviously most of the participants today actually looks more towards the Singapore market. So that's the reason why I have focused more on the Singapore market. So what I'm going to do right now before I actually kick off today's webinar is I'm going to launch a poll with a short list of all those a few Singapore stocks that I've looked at that suggest that there might be some pullback trading strategy opportunities. So what I need your help is once I launch the poll, I need you to go and vote on which are the stocks, maybe just one of them that you would want me to do a live demonstration on. And towards the end of today's webinar, during the live demonstration, I will see which one has the highest number of votes, and then I will do a live demonstration on that particular stock. All right. So I'm going to launch the poll right now, and you can just help me vote on the poll to let me know which is the stock that you would want me to do a live demonstration later on. Based on a swing trade using pullback strategy. All right. So right now I will continue with the presentation. And as usual, some important notes is that especially during the live demonstration later, I want you to understand that whatever that I'm sharing with you today, it's really for your education. Okay. It's not for me to tell you that, oh, this is an idea you should get in right now. So I hope that you can actually try to understand the live demonstration, use it from an educational perspective. All right. So this is in no way trying to advise you to trade on any stocks or in any market at all. Really just for education purpose. All right. So just a little sharing about my background, especially for those of you who are joining us in this webinar for the first time. Just a very quick introduction about my background is that ironically, although I have been sharing about technical trading, technical analysis as such, I actually started off as a very passionate fundamentalist. And it was, long story short, there was an opportunity that I became a technical analyst in OCBC investment research, and it was an opportunity that I actually tried to take up with the intention of hopefully I can transit into a fundamental analyst in time to come. So I mean, that's beside the point. But so I had a chance to become a technical analyst, and after I became a technical analyst in OCBC investment research, I started to realize that, of course, putting aside the fundamental knowledge that I had, I started to realize that actually technical analysis was really something that is really, really important. Even if I'm a guy who focuses on fundamentals, technical analysis is really crucial in terms of helping me to make a timely decision, like, for example, when to enter or when to exit based on what the market is feeling about this particular stock at any point in time. And at the same time, when I was technical analyst, I actually looked across many hundreds of charts across different markets, and I started to realize there are a lot of useful information. For example, in today's pullback strategy webinar, which I'll be sharing with you later on, some of these things that a pure fundamentalist wouldn't have known and understand, and as such didn't apply it. So subsequently, as I spent more years looking at the market from a technical perspective, I started to become a very devoted technician. And one of the main reasons why I remain a devoted technician to date is one of the main reasons is because I find that technical analysis is much more efficient and effective in terms of finding the most optimal time to enter and exit a trade. All right, even if I do not know the fundamentals at all. And hopefully I can share with you about that later on. So I was with OCBC Investment Research for about 7 to 8 years, and subsequently I decided to leave them because I really wanted to use my domain expertise in trading, in technical analysis, together with the use of technology to build something that will benefit millions of retail traders out there. And that's how I left them and became and actually started TraderWave. So TraderWave, for those of you who doesn't know what TraderWave is, basically TraderWave, we designed and built it as a very responsive, high-performance charting web application that allows seamless access across smartphones to desktop computers with a unified user experience and interface. So if you have a chance, you can actually go and try it out at traderwave.com. And in TraderWave right now, we are actually covering more than 30,000 stock indices and even sectoral indices across 16 Asia Pacific stock exchanges. So if your focus is on trading in Asia Pacific stocks, you can actually try out TraderWave to see whether it works well for you or not. And one important key value proposition that we built into TraderWave, which I use to hope that it is available in the professional tools that I use, is actually having the ability to set trading alerts so that it can help me to monitor for specific events that I want to watch out for. And so that I don't have to keep on spending time going back to the charts and see whether the event has happened or not. And as well as to receive multiple forms of alert notification. All right, so that's basically a very brief introduction about myself, my background, and what I have been doing and doing right now. So let's move on and focus on today's topic, which is pullback trading strategy. So now, for the benefit of those of you who has no idea at all what trading pullback is, put it very simply, trading pullback or trading pullback strategies occurs or is ideal to use when the current price movements is actually moving against the prevailing price trend. Now, from the explanation of this sentence alone, you might not be able to understand. So let me just quickly show you some examples about on this. So in this case, I just plucked off this picture off the internet because it gives a very good explanation, illustration about what a pullback means. So as you can see over here, this is based on a currency pair. It's not based on a stock. But as you can see that the prevailing trend over here, okay, prevailing is actually the longer term time frame trend, is actually on the up, right? Because we have the support getting higher. We have the resistance and the peaks getting higher as well. So the prevailing trend is definitely uptrend in this example. And how do we identify pullback? Remember, pullback is the current price movement that is going against the prevailing price trend. So the prevailing price trend is up. So any pulling back of the price that is opposite of this uptrend, which is in this case downtrend, is what we call a pullback. All right, so as you can see over here, this is a pullback when it returns from the resistance to this support level before bouncing off. This is a pullback as well. This is a pullback, and this is also a pullback. All right, so pullback doesn't happen only in a prevailing uptrend. Pullback can also occur during a prevailing downtrend. So how does it look like? So this is an example of another currency pair, which is a prevailing downtrend. As you can see over here, resistance has been getting lower. The supports has been falling as well. So a pullback in a prevailing downtrend is when the price goes higher. Okay, so in this case, this is what we call a pullback, from here to here, here to here, and as such from there. Okay, and one characteristic about pullback is that usually the magnitude of the pullback, okay, will be smaller compared to the magnitude of the actual fall or the actual movement in the direction of the prevailing trend. Okay, so as you can see over here, every 2 step down, in this case, there's a 1 step up pullback. 1.5 step down, you will see another 1 step pullback. Okay, so in this case, you will always see more down and then a little bit up, more down and a little bit up. So in this case, that little bit is what we call the pullback. All right, so just remember this for now. Pullback can occur in both uptrend, prevailing trend, okay, and a downtrend, prevailing price trend. All right. So now that you understand the basic concept of pullback trading strategy, I just want to quickly cover what are some of the pros and cons of a pullback trading strategy, so that you come in using this strategy or with your eyes open on what are the things you need to watch out for. So the pros of a pullback strategy, firstly, is that it allows us, or as a trader, an opportunity to join into the prevailing trend without having to actually chase the stock as a price as it goes higher and higher. Because remember, we enter a trade only when the pullback happens, when it means the price actually goes back to a more attractive price before we actually go in. So you have an opportunity to head back into the trend if you are not already in this particular trade, and without the need to chase the stock, which means that you, as such, you are actually in a way buying lower as the pullback happens. Okay, now we are I'm using a prevailing uptrend to explain this concept. So as a pullback happens in a prevailing uptrend, you are actually buying at a lower price, and then as it goes higher, you're actually selling into a high. So in a way, that is actually easier on most traders' psychology, because all of us, by human nature, we like to buy lower and sell higher. So actually a pullback strategy is actually easier to implement in terms psychology wise for many retail traders and investors. All right. And as such, when you trade a pullback trading strategy, it also has a better risk to reward ratio, because you are buying into an area of value as the pullback happens, and then as it swing backs up again, the ratio, the reward usually will be a higher ratio. Remember just now I was saying, every 2-step move in the prevailing direction, there will be a sort of like a 1-step pullback. All right, so whenever you have a 1-step pullback and a 2-step forward movement again, that's why the reward to risk ratio is actually better when you actually trade a pullback trading strategy. So these are some of the basic pros of a pullback strategy, which later on during the illustration, you might be able to understand better. So let me just quickly go on to what are some of the cons, the downside of a pullback strategy. Firstly, in a pullback strategy, if you die down want to implement a pullback strategy and no other strategy, you might actually miss the move, especially when the pullback does not return or does not pull back far enough into that target entry zone that you might be looking at. Okay, so later on I will explain more about this. So just remember, when a pullback strategy, sometimes it might not return far enough into an area where it's ideal for you to actually get in. Okay, and at the same time, pullback, sometimes it might not, you might not know, and nobody will know actually, but sometimes pullback could actually be the start of a trend reversal. So this is just something that you got to take note of. If you want to do a pullback strategy, you always got to be mentally prepared that this pullback might not bounce off again. It might be a pullback and then continue to crash lower, and it might be a total trend reversal of the prevailing trend. All right, so later on we'll see some examples as well. And lastly, the downside of using a pullback strategy, especially in this case, is that it can be very frustrating when the market is in a very hot, very excited, very strong trending market. Because when we are in a very strong trending market, pullback seldom happens. And even if pullback happens in a very strong trending market, usually the pullback is very, very shallow. is so shallow that it will not be enough to move into that zone which you will be looking to get into. Okay, so these are the things that you got to be mentally prepared if you are just going to be using a pullback strategy. Okay, especially in the case where in a strong trading market, it could be very frustrating because you just can't seem to find anywhere to get into a pullback trade because it keep on going higher and higher and higher. All right, so that's the downside of a pullback strategy. Okay, so now next I'm going to go into my 10-step process to implementing a pullback trading strategy. And in fact, this 10-step that I'm sharing with you, many of the steps in between actually can be applied to even other kinds of strategies as well. All right, so just to quickly help you to understand this part of it. All right, so let's take a look at what are the 10 steps that I usually take when I'm looking at implementing a pullback trading strategy. So firstly, before I actually decide on a stock to buy or decide when to get in and when to get out using a pullback strategy, I will firstly take a look at the chart and I will try to identify what is the existing prevailing trend or the existing major trend first. Because without knowing what the existing major trend is or the existing prevailing trend is, you wouldn't be able to know what is considered a pullback, right? So that I hope that makes sense to you. So for example, in this case, for the benefit of those of you who are from India, especially, at least I want to be fair to you, I use this Indian Tata Chemicals from National Stock Exchange to illustrate to you. Okay, so live demonstration, to be fair to Singaporeans, we'll do the Singapore Stock Exchange stocks. All right, so for this case in Tata Chemicals, as you can see over here, prevailing trend previously from 2011 to 2014, it was generally down. Why? Because as you can see, the peaks has been getting lower, the supports has been getting lower as well. All right, but since then, okay, it has been on up run thereafter from 2014 even until today. So the general trend right now between over the past 4 years has definitely very clearly has been on a major uptrend. So in this case, we can identify and affirm that the prevailing trend is actually uptrend. So if we are looking at a prevailing uptrend, the pullback will actually means that when the price drops and when the price pulls back, comes back to a lower price, that is what we call a pullback in an uptrend prevailing trend. All right. So now that we know that the prevailing trend is up, so we need to identify where are the potential areas that we could potentially look to get into for a pullback trading strategy. All right, so there's a few different ways to do it, and I'm going to just share with you two of the most common methods to help you identify the potential reversal areas where you can get into a pullback trade. All right, so in this case, I'm going to show you first using a trend line. Trend line is one of my most favorite tool to use. Ahead of all technical indicators and overlay, trend line is the most basic things that which I think anyone using technical analysis needs to learn how to use. All right. So when we use trend line on this particular stock, for example, you can see very clearly that the price has actually bounced off numerous times on this uptrend over the past 2 to 3 years. Okay, so we can clearly identify that the prevailing trend is this green uptrend line, and as such, where could we identify the potential reversal areas? Can you see over here? So this blue arrow pointing down is the pullback that happened over a period of time. And when it comes back to that line, it actually started to bounce off and goes into an uptrend from there. And on this occasion as well, there was another pullback back to this area. And then when it bounces off, it goes to another even newer high from there. And can you see as well over here, recently, in fact, this chart was just pulled out today. Okay, so the price is actually based on, if I'm not wrong, yesterday's closing price, because when I put the chart out, the market hasn't closed for today yet. All right, so as you can see over here, this currently is in a pullback move at this moment, and in fact it has already shown signs of bouncing off this uptrend support. All right, so this is one way of identifying potential reversal area which you could potentially get into a pullback trade. All right, so other than using trend lines, another method we can use in this case is moving average, for example. So this is based on a 200 days simple moving average. As you can see over here, after Tata Chemicals, the price penetrate above the 200 days moving average from below, it has been bouncing off this 200 days moving average for quite a number of times. Okay, even recently the break was very, very brief only, and in fact it was just slightly below the 200 days average. So if we use a moving average, we can also use that as a way to establish or identify the potential reversal areas to look at. So in this case, can you see the pullback to the 200 days moving average around here? That was where the reversal happens, and a good time to get into a pullback trade and to ride the next move upward from there. So as you can see over here, pullback one step, the up move two step. Pullback one step, the up move two step. And that's the reason why I explained earlier on, when you get into a pullback trade, you usually have a good reward to risk ratio. All right. So as you can see over here, the pullback happened and then it bounces off from here as well. Pullback happens over here, and potentially this could also be a pullback trade potential over at this area. All right. So I'm sharing with you two ways to identify potential reversal area to get into a pullback trade. But of course, it is not limited to just these two methods. Some traders also like to use things like Fibonacci. Some traders will also like to use things like horizontal support and resistance level to do that. Okay, so I do not have the time to cover everything today, but I just want to help provide these two ways so that you can at least understand the concept behind how you actually identify a potential pullback trade, right? So the next step that I will usually take is that I want to check a few different things to ensure that, to give me a more conviction that actually this reversal area could be a good time to get into a pullback trade. So the next step I'll be looking at is when I look at the pullback that is happening, okay, I want to make sure that there isn't the volume hasn't actually increased sharply during the pullback. Because imagine this, if during the pullback and you see the volume increasing, what does that tell you? It tells you that traders or the big boys or the big players could be attempting to liquidate, okay, a lot of shares during the pullback, which is not a good sign, because we don't want the big boys to be getting out during the pullback. Because if they are getting out, then who is there going to be support the price at those current level and push it higher from there? All right, so in this case, as we can see over here, during the pullback part over here, over the past 2-3 months, you notice that the trading volume actually generally has been declining, which means that declining volume during the pullback means that that is a temporary pullback, a relief. Usually it suggests that it is a lower probability that this could be a reversal. All right, so that's what I'm trying to establish. All right, so with low trading volume during the pullback, it means that it's just a form of consolidating. It's just a form of dissipating some of the bullish energy earlier on. But once this energy has been dissipated, then the up move could come back again. All right, so that's the third step that I usually will take. And then the next fourth step that I will take, I will check, is that I want to ensure or make sure that there isn't any upcoming earnings announcement or corporate actions around that area which I am looking to get into a pullback trade. Okay, and of course, this applies only if you are trading stocks. If you are trading currencies, then it doesn't really matter about the corporate actions, but still there are some key events you need to watch out for if you are trading Forex. And if you want to do a pullback trade on a Forex currency, you want to make sure that there isn't any major announcement from the FOMC during that reversal area. Because if there's going to be any announcement or corporate actions that you already know is going to happen, then things might be a bit unpredictable at those reversal areas. So I wouldn't actually get into a trade based on those occasions. So as you can see over here in this example, dividend event actually happened in 31st of July. So if I'm looking to get into a reversal trade during that period, okay, and I notice that there's a ex-dividend or a corporate announcement that's going to happen around that time, then I might want to just sit back first and just watch until the event has passed. Then I will see whether it still makes sense to get into the pullback trade or not. All right. So in this case, as you can see over here, at least for dividend announcement, you can see over here there isn't any dividend going to be announced or going to be go ex dividend. So which means in this case, assuming that there's no corporate announcement or results, then we could potentially look at a pullback trade around this area at this point in time. Okay. So that's also another thing that I will try to ensure for the fourth step. Now that you have identified the prevailing trend, you see that the pullback has actually started to happen, and the trading volume during the pullback hasn't been very high, and there isn't any upcoming announcements or corporate actions or events happening around this pullback trading area. Then the next step is watch out for signs of reversal towards the end of a pullback. Okay, so when the pullback is happening and is falling, pullback, because in this case, pullback is falling, right? So when it pulls back to a certain area, you want to see that the market is starting to shift a bit of the sentiment, and it seems like the market is trying to force a reversal of the pullback. That means it's trying to change the trend back up again. So in this case, do you notice that over here, what happens is that as the pullback was happening, And as it comes to this level, do you notice a horizontal resistance support level over here? So do you notice that on this particular day, it actually opens lower, okay, right around this uptrend, prevailing uptrend line. And then it actually rallies very strongly and close above this horizontal level of about 660 region. Okay, so this usually is a good sign that a potential reversal is starting to happen at this key support level. Okay, so once you see this kind of levels there, you want to start to take note because you want to start preparing to get into this pullback trade, if that makes sense to you. All right, so once you think that, okay, now that the pullback seems to have ended, there's a good chance that the rebound here will take place and continue to go higher from then. That's when you will want to start to look at, okay, preparing for the trade. So when preparing for the trade, a few things you need to think about. At what price am I going to enter? Where's my stop loss going to be? Where's my profit taking level? And how am I going to size my trade? And that's where it comes to the next few steps, which I'll be sharing with you. So now that you see that there are signs of reversal at this two key support level, okay, just one more thing before I go on to the next step. When we are looking at potential reversal area, okay, it is very ideal if we look for a confluence of the different factors. Okay, so imagine this: the rebound over here happens at an uptrend support level. All right, it also happens at a key horizontal support level. So you have two important support level holding firm at this level. It will suggest usually that the probability of the reversal around here is going to be high. Okay, so let me just give you a very quick example to illustrate this rationale. So imagine this: if let's say there are like, let's say 20,000 traders looking at this particular stock, looking at to find the ideal time to get in. So let's say like 5,000 of them likes to use trend line. Okay, so which means that they are looking out for the price to touch that uptrend line, and they will be looking to get in based on the uptrend line, right? So 5,000 of them, and maybe another 5,000 of these market participants looking at Tata Chemicals could be thinking that, wow, I see a very key horizontal support at 660. If the price comes back to 660, I want to buy this as well. So can you imagine this? 5,000 people looking at the uptrend line, 5,000 people looking at the horizontal support. So what happens when the price really comes to this level? Both the 5,000 on each side will want to come in and rush in to get a stop. And that is the reason why we usually want to see a confluence. That means it's a combination of all these factors supporting that support level and supporting the higher probability of it going higher from there. All right. So in this case, you can see two key supports holding firm, and that is probably the reason why we see a very strong rebound around the 660 region, which is both the key uptrend line as well as the horizontal support level. Okay, so now we have seen some indication that a rebound is starting, and in fact, the up move has already started over the past few days. Okay, but putting that aside, we are just using this as an example to study how to get into a pullback trade. All right, so the next step, the sixth step, which I will get into, is this. Once you decided that this is an area you want to get into, obviously the next most important thing is, where can I actually get into? Should I get in now? Should I get in later? Or should I just wait some more, wait for the pullback to happen again? All right, so there's a lot of different factors over here. But in this case, I'm going to share with you what are some of the examples you can actually estimate or decide on your entry level. All right, so let's just, for learning purposes, let's assume that the past 4 days candlestick hasn't happened yet. Okay, so it has been going on a pullback and a pullback and a pullback. Okay, so when the market opens at about 650 area, okay, so it has not shown that the reversal is taking place yet. All right, it just shows that it is still in a pullback state. Okay, so this is one area where traders using pullback strategy, they are very confident. They want to have a better risk reward ratio. So this could potentially be the place where they start to get in and enter a pullback trade. Okay, so there's no right or wrong that you definitely have to wait for a reversal before getting in. Okay, so if you decide that when it pulls back to a key support level and you just want to get it right there and then, there's nothing wrong with it, because when you get in over at this point over here, just when it touches 650, what happens is that there's, again, pros and cons to this way of entering at this point. Okay, is that the pros is that if you get in here and the up move materialize, the rebound materialize, you're going to get a fantastic reward to risk ratio. So that's the good thing about entering without waiting for a reversal. Okay, but of course, the downside is when the reversal has not happened yet, maybe this could be the start of a prevailing trend reversal. Okay, so the downside is the probability of it working out for you as you try to get it over at this very point is that the probability of it rebounding is not very established yet because we haven't seen any rebound yet. It could continue to fall lower from here. Okay, so that's the pros and cons of getting over at this point. So if you think that getting in at this point is still too risky for you, you don't mind having a smaller reward to risk ratio, but you want something that is a more higher probability, then the more ideal thing is for you to wait for some signs of a reversal. So in this case, you can actually wait and see if the rebound actually happens from 650 onwards. So in this case, as the rebound happened, open at 650 and it ends up closing at about 660 region, it tells you that there is a rebound is already happening at this support level. So are you confident enough to actually get in at this level already? Are you assured that this rebound seems very strong already? So if you are assured that this rebound is very strong and you think that there's a good chance it will go higher from there, that's when you can also use that as an entry level. That means almost toward the close at about 660, you can actually look at getting in from there. Okay, and again, there are pros and cons to it. Okay, the pros is that when you get in at this level, you have already seen the rebound happening strongly. So which means the probability of it going higher from here onwards will be significantly higher. Okay, and then what's the downside of it? The downside, of course, is your reward to risk ratio will be lesser compared to if you actually enter at about 650 during the market open. All right, so again, the pros and cons of this. And of course, in this particular example, as I'm sharing with you right now, that rebound has already happened. Over the past 4 days, it has already gone higher. So imagine this, if you miss what happened 4 or 5 days back, and right now you're looking at the chart, should I still get in at the current moment in time? So if yes, then this could potentially be another area that you might want to consider getting in to ride the move upward from here. So again, there's no right or wrong answer. If you still decide to get in, what is the good thing about this? Good thing is, it seems like the rebound has already happened and is on its way up already, which means that the probability of it going higher from here will be better. All right. But the downside is what? Again, back to the reward to risk ratio. If you get in right now, okay, and assuming you have a stop loss somewhere below, which I will touch on later on, the reward to risk ratio is way worse compared to if you get in at 650. Okay, I hope that makes some sense for you. So in this case, I've shown you 3 possible entry level as you see the pullback develops. All right, so that again, there's no right or wrong answer. There's only a pros and cons to which one you think fits your character or personality better. All right, so now 6th step is done. Now let's say we decided to get in at the current level. Okay, the 650 and 660 has already passed, so let's just forget about it. Let's just assume that we decided to get in right now, which is around 690 level. Okay, so if we decide to get in now, this is where our entry price is going to be. Next, if we decide to get in now, where is an ideal place for us to place a stop loss? Again, I want to emphasize, if you are a trader, responsible trader, if you want to become a proficient and profitable trader, you always need to know when you should get out if something goes wrong. Okay, and that is what a stop loss is for. And I want to emphasize again and again, please, whenever you get into a trade, decide first where you are going to get out with a stop loss before you even enter a trade. Okay, and in this case, which I'm going to share with you how to size the trade later on, is that if you don't have a stop loss, you can't even size your trade properly. All right, so again, I want to emphasize, always have a stop loss or decide on a stop loss even before you get into a trade. All right, so in this case, step 7, we are going to decide on where the stop loss level is going to be for us in this particular trade. So usually stop loss in a pullback trade is you want to place that stop loss exit level somewhere below the key support level. Okay, so in this case, can you see over here? This is actually the ideal range, the ideal area to put your stop loss level. It could be all the way until about 640, or it could be all the way down to about 625. Again, what is the right place to put your stop loss within this range? Again, there's no right or wrong answer. Again, it all depends on how comfortable you are about setting the distance away of the stop loss. So the pros of setting your stop loss further away from the key support at about 650 is that there is a less chance of you getting whipsaw, the less chance of you getting pushed out with a stop loss and the price goes higher from there. Okay, but the downside of it is of course that if you place the stop loss nearer to the support level, okay, it is easier to get triggered, but the reward to risk ratio will be better. So again, pros and cons. You have to decide between 640 and 625. Where do you want to put your stop loss? All right. So I'm going to just set an example later where the stop loss is going to be. Okay. So in step 7, I decide where exactly I'm going to set a stop loss. And then after that, I will at least as a new trader or a novice trader, my suggestion is that before you get into a trade, know where you want to take a profit first. Okay. But if you're already a very experienced trader, you might not want to establish or determine exactly where you want to take a profit. Okay. So again, new traders, decide on a profit taking level first and then follow that plan. If you're already very experienced, maybe you can use some other things like a trailing stop, or you might want to observe as it goes higher and higher where is the most ideal place to take a profit. Okay, stop loss, I am very adamant that you need to set it before the entry. But for profit taking level, depends on whether you are experienced or not. You can actually decide on your profit taking level right now before you enter, or you can actually decide as the trade develops. All right. So I'm going to just base it on the example that you are generally a new trader. So my suggestion is for you to establish and determine your profit taking level first, even before you get into a trade. All right. So there's a few different ways of determining your profit taking level for a pullback trading strategy. So in this case, we will notice that over here at about 770 or 760 region, that is a key horizontal support level, resistance level, because that is where the price on 2 occasions start to reverse back. Okay, so if this pullback trade is going to work out, it comes to 770. Okay, we might want to consider taking profit over at 770 region. Okay, as such, this is where we are anticipating the up move could potentially end, and that is where we could potentially take a profit at that resistance level. Otherwise, we could also make the assumption or anticipate that maybe the price up move will just follow like the previous ways that it has moved. It will move all the way to the upper channel boundary. Okay, so in this case, you could also decide that I want to let the profit run longer. So maybe I will want to take a profit only when it reaches the upper channel boundary that is somewhere between 820.30 to 850, assuming if this is the gradient that is going to move in. All right, so again, there's no right or wrong answer in terms of establishing your profit taking level at 770 or establishing it at 850. So what's the pros and cons if you decide on 770? When you decide on 770, the good thing or the pros is that very high chance you will be able to exit with a profit at 770. Okay, the downside is that the reward to risk ratio, as you can see later on, will not be as good. Okay, compared to if you decide on your profit taking level at 850. So if you, let's say I decide that I want to wait for the price to go all the way until the upper channel boundary at 850 before I take a profit, the good thing is if it happens for you and if it works out for you, you will have a fantastic reward to risk ratio, okay, versus your entry and your stop loss level. Okay, but the downside obviously is the chances of it happening will be lesser compared to if you are talking about it going all the way to 770 versus going to 880. So now do you realize whether you're talking about entry level, whether we are talking about stop loss level, or whether we are talking about profit taking level, it is always a dilemma and a choice between whether you want to choose the pros and the cons of each outcome. All right. So there's no best thing about it. There's only pros and cons to it. All right. So now step 8 is to establish your profit taking level. So now you know your entry level, your estimated entry level. You know your stop loss level. You know what is your profit taking level. The next very key important step, which was the step that I missed earlier on, and I decided to put it in because I want to establish this very important step throughout all the webinars that I do, is size your trade correctly. Okay, so this is something that is an afterthought for many traders. So when they decide to get in at a certain price, even if they have a stop loss, they have a profit taking level, they just anyhow decide on the number of shares to buy. Actually, scientifically, good traders always have a methodology to determining how many shares should I be buying or selling or getting into this trade based on the entry stop loss level that I have determined before I get into a trade. Okay, so in this case, I'm just quickly share with you my method of sizing the trade. Okay, in this case, so for example, remember we were talking about getting it at about 690, right? Okay, so if you can see over here, this is actually a position size calculator that is built into TraderWave. So let's say we want to get in at 690, which is over this area over here. Okay, and let's say I personally determine that 642 is where I want the stop loss level to be. Okay, so for you, it might be 650. For some others, it might be 425. Doesn't matter. My choice, I decided to put at 642. So when I have entry level over here, my stop loss over here, then at the same time, I'll also establish the target, which I think I want to take profit when it goes to the upper channel boundary, which is 838. Okay, so what happens is that, let's say, assuming if I have a total portfolio size of, let's say, $100,000, and I have established that in every trade that I get into, I only want to potentially risk losing up to maximum 1% of my total portfolio value. Okay, so in this case, I'll put in 1%. If you think that my general suggestion is for new novice trader or inexperienced, my suggestion is keep that risk percentage to 0.5 to 1%. Okay, for traders who are already very experienced, sometimes they could risk up to 2 or 3% per trade. Okay, so which means that if I get into this trade and I size it accordingly to this based on 3%, what happens is that if the trade goes wrong and hit my stop loss, I will have lost about 3% of the total portfolio of the total capital base that I have. All right. So in this case, let's just, for easy understanding sake, let's just put that I'm willing to risk 1% of my total capital on this particular trade. Okay. So I just input here 1%. And my total account size is 100,000. So it will automatically calculate the number of shares that you can potentially buy. You can buy so that you get into this trade with, in this case, is 20 shares. Okay, I'm not sure whether you can buy 20 shares in India, but in this case, assuming if you can do it, if you buy 20 shares with this stop loss value and this entry value, okay, and with this risk parameter and with this account size, if let's say you get in and you buy 20 shares, and you hit your stop loss, get out at 642, you shouldn't have lost more than 1% of your total capital base. Okay, and this is how we actually size the trade. All right. So if you are still not very sure about how to do this, you can actually refer back to the past webinars that I've done before, where I've actually done more explanation about how to size your trade. All right. So now the ninth step, after determining the number of shares that I want to buy, then comes to the final stage, which is to enter the trade based on the entry level that I have determined that I want to get into. Okay, the stop loss level that I've established using by buying just 20 shares of this particular counter, and then knowing that I'm going to take profit at somewhere about 838 region. So as you can see in this case, this is the trade tracker that I've used to help me monitor that where my entry level is, where my anticipated stop loss is going to be, and where my profit target level is going to be. So, and as you can see in this case, that based on this trading plan that I've initiated for this particular pullback trade, we are looking at a risk reward ratio of about 3.1 to 1. Okay, so it's about 3 times, slightly more than 3 times reward to risk ratio. Okay, so once you have done all these, you have followed through the 10 different steps, then the only thing you can do as a trader is sit there and wait. Okay, wait for the trade to wait for the move to materialize by itself. So there is only 2 outcomes that's going to happen. Okay, either after you enter a trade, the price falls, hit your stop loss, and you get out and you take back the rest of your capital, or if it works for you, it could go all the way up to where my profit taking level is, and then I take a profit with a 3 times a reward versus the risk that I've taken with my entry and my stop loss level. Okay, so this is really as simple as it is, these 10 steps, and you might even realize that actually these 10 steps, most of these 10 steps can be applied regardless of what kind of trading strategy that you use, because ultimately most trading strategies require you to establish the entry level, requires you to establish where your stop loss is going to be, requires you to establish where your target profit is going to be, and requires you to size your trade correctly according to the risk parameter that you have. So these 4 things can be applied regardless what kind of trading strategies that you have. Okay, so in this case, I'm just showing you how to apply them in a pullback trading strategy. All right, so I hope this 10 step gives you some insight into how I look at a pullback trade and how I take a step-by-step process or approach towards executing a pullback trade in this particular example. All right, so what I'm going to do right now is, well, time is really flying today. So I still have about 10 minutes, and I'm just going to do one live demonstration of a more accelerated process of how I initiate a pullback strategy. So as we can see over here, the poll, has it been ended? Okay, so I've just ended the poll, and it seems like most of the participants actually prefer me to do a live demonstration on Sembcorp industry. So that is exactly what I'm going to do right now. All right. So let me just switch to the charts over here. Oh, so I happen to be in the Sembcorp industries as well. So maybe y'all know, I know what you're thinking about. All right. So, okay. So what I'm going to do is remember the 10 step. First step, look at what is the major trend. Major trend previously up, sideways, down. And do you notice over here that the major trend seems to be going up? Okay, why? Because you see the bottoms here has been getting higher, 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 and higher. At the same time, you notice that the peaks, the key peaks over here has been getting higher, 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 higher as well. So generally, this is a period of gradual uptrend. Okay, so if the prevailing trend is up, what is the pullback that we are looking to get into? We are looking at a downside pullback, right? Okay, so firstly, we need to establish where are the potential reversal points first. All right, so in this case, I just want to use, I prefer to use uptrend line. So I'm just going to use uptrend line as an example. Of course, you can use other methods as well. So usually you see if I start to draw in this manner, okay, this is where the long-term uptrend line is. In fact, if you actually bring out a parallel channel, I'm not sure, I'm just trying to bring it out to see. Okay, so there's some sort of a trend channel in this general direction. Okay, so this is basically the prevailing uptrend. So in the prevailing uptrend, we want to look at the pullback. So in this case, do you realize that from here, it has been actually being pulled back and it comes to this level as well. So at the same time, do you also notice that there's a pretty key horizontal support level at about $3 region? Okay, so do you notice over here, support, 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 okay? And do you notice what happens over here? There's a very strong rebound, and it was on significant increase in volume as well. So which means that on this particular day, seems like a lot of traders were actually anticipating a rebound, and they actually got in. That's why there is a significant increase in trading volume on this particular strong green candlestick day, okay? And then subsequently after that, the next 2 days, the past 2 days has been pulling back. But do you notice that the pulling back has on thinning volume as well? Okay, so it means to suggest that it seems that this support is still holding very well. And as such, this could potentially be the pullback trade that we are looking at, right? Okay, so now, let's say we decided that, okay, this is a pullback trade we want to get into, all right? And let's, the next step, obviously, is to check whether there's a corporate action coming up. Okay, so as you can see over here, ex-dividend is going to be happen in 25th of April. That's still another 25 days away. So that is, we are already preparing to get into this trade, okay, assuming that. So it's still quite far away. So I don't think it will actually affect the outcome that much. So we don't have to worry about this dividend that's going to be paid out on the 25th of April. And at the same time, volume during the pullback, can you see that during the pullback, the volume over here has been like going lower and lower and thinning as well. It was only on this strong rebound that the volume surged again. So that is actually a good sign that the rebound could be materializing soon. All right. So let's say we decide to get in right now. Next thing is to plan for where the estimated entry level is going to be. So in this case, based on the today's closing price, is this today's closing price? Yes. So based on today's closing price, it's about 306. Okay. So let's assume that we are getting at 306. Maybe in tomorrow's open, if it's still open at 306, we're getting at 306 because we need to size the trade, right? So 306 is our entry level. And where do you think, in this case, where is a good place to put your stop loss? Remember, stop loss is meant to be somewhere below a key support level. So key support level, as we can see over here, the very key one is, of course, $3, right? So definitely our stop loss got to be somewhere below $3. So in this case, let's say my preference is, okay, I choose to set it at 296. Okay, 296, right? So let's do the next step we got to do is to size the trade. All right. So let's try to size the trade right now. So my entry level, let's say estimated is 306. Okay. My stop loss is just now earlier on we were talking about 296, right? Okay, hold on. Let me just take a look again. Okay. Yes, 296. All right. So 306 and 296. Entry 306, stop loss 296. Okay, so let's say my account size, okay, everyone is got to be different, right? So let's just say mine is about $100,000. I don't have that much money, by the way. Based on the regular risk parameter, which I suggest usually to most people is start with 1%. Okay, so based on 1% risk parameter and $100,000 capital base that I have, and based on this entry and stop loss parameter, I am allowed to buy up to 10,000 shares. Okay, so that's the 10,000 shares that I'm allowed to buy up to. Okay, so target we have not established, right? So let's just temporarily establish at 330 first. We can actually move it thereafter. Okay, so can you see over here? Entry level over here, stop loss level over here, and this is based on a sizing of 10,000 shares to buy. Okay, so the next day the market opens, if I want to get in this trade, I will get in ideally at 306 with 10,000 shares. Okay, now if we just take a look at profit taking level, so if let's say just now earlier on we have not decided where to take a profit, now we want to take a look at where ideally to take a profit. So where are some of the areas that could potentially be profit taking level? So one of the area is maybe about 340 over here. Okay, so you can see over here there's a minor peak here, there was a support here, there was a peak area. Okay, so this is probably one of the horizontal resistance we could potentially take profit. Okay, so we could, let's say, pull it up to here, and based on this entry, stop loss, and this particular parameter, you can see that, wow, the reward ratio is actually pretty good for this particular swing trade using a pullback trading strategy. So 3.4. But if you are even greedier, if you think that I want to take the chance that it will go all the way to the upper channel boundary, you can even actually decide that you're going to move your profit taking level to somewhere about 375, or maybe even if you, let's say you take this gradient up, it could even be about 385 region. Okay, so if you move it up to take a profit at 385, you'll notice that there is a 8:1 reward to risk ratio. Okay, so again, if you decide to take at this level, there's pros and cons to it. Pros is that you have a very good reward to risk ratio. The downside is that the probability of it going all the way up to here will obviously be lesser compared to if you just set it at 340. So again, which one are you willing to live with? All right, so just say, for example, in this case, I'm willing to live with just a reward ratio of 3.4:1. So maybe I will just establish my profit taking level over here, and after that, I execute the trade and just wait for the trade to establish itself from here. Okay, so if we get in tomorrow at this level, it will either comes back, touch my stop loss, and I just get out with the stop loss, and then I move on to the next better idea. Or things work out well, it continues to grow higher and higher from there, and when it touches 340, I will get out with a profit with a 3:1 reward to risk ratio. Okay, so I hope this live demonstration give you an insight of my thought process as I look through all the different factors and to combine them into making a very process-oriented trading decision using a pullback strategy in this swing trading kind of style. All right, so I hope it gives you a very good insights to that. And right now I have only about 5 to 10 minutes left. So what I'm going to do is I'm going to try to entertain some of the questions you might have, and I will try as much as possible to stick to questions that are related to pullback trading strategies. So let me just quickly take a look over here. Okay, so what I'm going to do is I'm going to switch out of the screen sharing first. Okay, so that you can see my face again. You have not seen my big face for the past 1 hour. So let me just take a look at what are some of the questions that you guys have for me. All right, so I've seen these 3 questions over here. If you have more questions, just put it in. I'll try to answer as much as I can within the next 5 to 10 minutes. Okay, so from Ivan, when there is an X dividend, normally stock price will drop. Yes, you are right. Okay, in fact, during X dividend, it's actually, a lot of people think that dividend is actually an income that they get or a profit that they get. No, actually dividend is simply a cash flow event. Imagine this, if I am the public listed company, I'm the company, I want to issue, let's say, a $1 dividend. What happens is that technically, I am simply just taking the $1 from inside my corporate bank account and then passing out to you as a shareholder. So you get that $1, but at the same time, my bank account in the company, my company bank account has $1 less. So what happens is that as you get a $1 in cash, my valuation of my company drops by $1 as well. So that is the reason why during X dividend day, you will notice that the price usually, okay, under normal circumstances, will drop as much as the dividend is being paid out. Sometimes more, sometimes less, but usually it's about there. All right, so that's something that you got to take note of. Okay, so next question, Irvin, can we wait until the downtrend, the downward resistance line during the pullback be broken to confirm rebound? Okay, so I'm not sure whether you're talking about what is your prevailing trend right now. Is your prevailing trend? Okay, maybe Irvin, you can let me know what is your based on what prevailing trend so that I can understand your question better. I'll just skip to the next one first while waiting for your reply. And Amol, if volume is less, then can we take entry or volume should be more? And your volume, are you meaning during the rebound itself, or do you mean during that pullback period? So if pullback period, you see a heavy increase in volume during the pullback itself, then my suggestion is it is not so aligned anymore. So maybe you want to consider just avoiding it, okay? Because when during the pullback and the volume, selling volume is very heavy, the momentum could potentially, very highly possible that you will continue to push it lower from there, okay? So my suggestion is when volume during the pullback is high, then it is one less good factor for you to get into the pullback trade. But if you are talking about the volume during the reversal area, if the reversal area, the volume is low, not as high as what we saw in Tata Chemicals just now, then it will mean that there will be one less confluence of these factors, okay? But if you see that the volume during the rebound is not a lot, but it is at a strong support level where it's established by horizontal line, trend line, maybe even moving average, or maybe even Fibonacci. So you see you have a confluence of 4 factors, but you're missing out on the other factor, which is a heavy volume during the rebound. Then you have to weigh yourself to see whether do I still want to get into the trade or not, okay? But if let's say during the rebound, volume is low, it is not at a key support level, it's not at a key uptrend level, then that means there is totally no alignment of all these confluence factors at all. So which means that the chances of that happening is going to be lower, and as such, you might want to consider not getting in at all. All right. So next question from Tristan. Can you not have 2 profit taking level and move your stop loss when you reach first and wait for the other one? I'm not quite sure of your question. If I interpret correctly, maybe you are trying to say, should you have a trailing stop? Because when you talk about moving your stop loss higher, that's a form of a trailing stop. Yes, you could potentially do that. The reason why I'm not sharing about that way of taking profit over here is that it is rather complicated because I need to explain the entire concept of why you need to have trailing stop. I don't have the really much time to touch on that. So actually, in a few of my previous seminars, I actually did an elaboration on trailing stop. Maybe we can take a look at those webinars again to understand about the trailing stop part of it. But in this case, I'm not sharing about trailing stop or moving your stop loss because I want to keep it simple for most people to apply. But if you're already experienced, then maybe you can actually have multiple points of taking profits or even moving your stop loss higher into a trailing stop thereafter. All right. And from Ping Ping, what is the period I should chart? 1 year or 3 years? Okay, no right or wrong answers. For most part-time retail traders, investors, okay, I would suggest that when you want to do a pullback swing trading strategy, you should at least be looking at a horizon of at least a few weeks to a few months, that kind of swing you're looking at. Because if you're looking at anything that's shorter than that, you need to be very on the ball in terms of seeing how the market is developing, especially if you are not able to set a stop loss into your trading platform. You got to manually monitor for those stop loss and profit taking level. Then it's going to be a toll because you have to keep on looking at it. All right. So generally for part-time retail traders and investors, I would say that the period you should be charting should be something between a 1 year or 2 years period. Okay. That's generally my recommendation. Okay. What is considered as high volume from Ping Ping again? High volume, there's no absolute value for high volume. High volume is always relative to the previous trading sessions, the volume for the previous trading sessions. So if let's say previous trading session over the past 20 sessions has been averaging around 10,000 shares, all right, of daily traded shares on a daily basis, then suddenly on this day you have 50,000 shares. So you see 50,000 is 5 times the average of the past 20 sessions. So that is considered high volume. So high volume is not whether it's 50,000 shares or 100,000 shares, but it is high volume. Is it high volume relative to the past 20 sessions, for example, based on average volume for the past 20 sessions, or it could be 30 sessions, or it could be even 50 sessions as well. So that's the reason why we use chart, because from chart, you look at the volume, you'll be able to see a certain spike out of the norm. So that is how we identify high volume using a chart. All right. And okay, so from Fel, should stop loss level be fixed or shall it be revised every day? My suggestion is once you establish your stop loss, just let it remain there. Okay, don't revise it on an everyday basis unless you are going to be using a trailing stop for this purpose. If you're not using a trailing stop, then my suggestion is just set it there. Okay, if it touches the stop loss, you get out. If it doesn't hit the stop loss, just hold on to it and anticipate and hope that it will actually continue to go higher towards your profit taking level. All right. So Srinivas, to make a trend line, we should join tolls or body? I can't understand this question, so sorry, I can't answer that. Okay, last question. Okay, this is going to be the last question I'm going to answer for today. So from Srini, what are the moving average days that you would suggest? That is a very, very, very good question. Okay, so this is something that I haven't touched on in my previous webinar, that maybe I will touch on in future webinars, but just quickly to share with you. Okay, let me just make this clear. Every stock has its own personality. Okay, you imagine if a stock is a person, every stock will have its personality, and the personality of a stock is a combination, is a summation of all the participants that is participating in the trading of this particular stock. Okay, so imagine this, the personality of the stock is due to the participants that is participating in this stock. All right, so as such, different stocks has different personalities because different stock has different kinds of participants participating in it. And that's the reason why sometimes for some specific stock, you will see that the movement is up and down, up and down. For some stock, you will see that it's very gradually going up. Okay, going up from there. So as such, my suggestion for you is that there isn't a single moving average that you can apply for every single stock. No way. It's like you can't try to fit a L-size shirt on every single human that you see, right? Because every human has got different sizes, and because of the way they have their diet, the way they eat, some of them don't exercise, so they might be a bit more plum size. No offense to anyone that's about that size, but just to illustrate to you. So as such, what my suggestion for you is that when you want to use moving average as part of the establishment of that pullback reversal area, you should be using a moving average that fits for that particular stock. Okay, so my suggestion is this. When you take a look at the stock, it seems like there's some kind of you can potentially apply a pullback trading strategy. And if you want to use moving average for that purpose, my suggestion is bring out the moving average of 50 days, 100 days, 200 days, 300 days, okay? And then see which one it tends to rebound the most time on that moving average. All right, so that will usually suggest that moving average is the ideal moving average that you should be using for that particular stock. Okay, and then if you take a look at another stock, again, 50 days, 100 days, 200 days moving average, it might instead of the 50 days, which for the earlier stock, it might be that, okay, this stock tends to bounce off very well on the 200 days moving average. That's the case for Tata Chemicals, for example. So in this case, you should be using the 200 days moving average for that particular stock, because that is the moving average that the participant seems to have an affiliation to bouncing off that moving average area. All right, so I hope I answered that question for you. All right, so I've already exceeded the 1 hour for this webinar, and I will probably stop in this part of the webinar. So what happens is that after this webinar ends, we actually have a recorded video of this webinar. So if you want to revise again whatever that I've shared with you today about applying a pullback trading strategy, you can actually go to this webinar hub. So let me just quickly show it to you where it's going to be. Okay, so if you go to this traderwave.com/resources/webinar hub, or you can just Google TraderWave webinar hub. Okay, you can actually come to this site where we have all the video webinar recording of the past webinars that we have done. So I have covered on trend lines before. I've covered horizontal support resistance. I've covered price action. I've covered risk management. Okay, that's where the position sizing part, where I go into very deep elaboration on why and how you should apply that money management part. So if you couldn't get what I was sharing about the position sizing, please go and take a look at this particular webinar. And I also talk about best trading best practices as well. So you can go and view view that webinar as well. And our previous webinar, I actually covered on breakout strategy. So breakout strategy is a strategy that you can actually use together with pullback strategy, so that you have, because at different market timing, different market conditions, different strategy might be more useful. So for example, in a very strong trending market, actually breakout strategy might be one of the better strategy to use compared to pullback strategy. Okay, so if you want to learn something about the breakout strategy, you can go and take a look at this webinar recording over here. All right, so okay, just to quickly share with you, the next seminar is the next webinar is going to be on the 2nd of May. Same time, okay, so it's going to be another 45 minutes of session with live Q&A. And indeed, the next upcoming webinar in May, I'll be sharing about how you can actually swing trade with precision using Japanese candlestick. All right, so remember just now I was sharing with you potential reversal area using uptrend line, using moving average, right? So actually, you can also use candlesticks to add another confluence factor, another combination factor to the point where the reversal happens. So to put it long story short, if you see a good reversal Japanese candlestick happening at that key uptrend line or that key moving average, okay, then it suggests that there is a good chance that more confluence factors that the rebound will happen from there. All right. So if you want to learn more about Japanese candlestick and how you can use that using in a swing trade, do remember to go and sign up for this webinar that will be taking place on the 2nd of May. All right. So that's all from me for today. I hope that it has been beneficial for you over the past 1 hour to learn and understand how a pullback trading strategy works, in my personal opinion, how I would apply it, and the steps that I have shared with you. And I want to emphasize again, trading is really about a very solid and disciplined trading process. Okay, and that's the reason why I break it down into 10 different steps, so that you can actually try to follow as much as possible in those steps. And I hope that today's session has been helpful for you, not just learning about pullback trading strategy, but in terms of the entire trading process as well. And I look forward to seeing you again and interacting with you again in our next webinar in May. And that's it from me for now. I hope you have a great day ahead. All right, thank you so much and see you soon. Bye.